JJ the CPA here. Hope you're doing well. So for those getting the employee retention tax credit, if you're paying a hefty fee related to that, a contingency fee, I want you to do the math for me real quick here, because whatever your credit is, if you're paying a percentage to whoever helped you do that, first of all, it's illegal. I'll tell you why later. But I now want you to make sure you're aware that you're going to pay tax on whatever that tax credit is. It's a reduction of your deductions, which means that whatever that credit is, it's going to reduce down your deduction of wages. If this is related to a 2020 credit, you got to go amend 2020. If it's related to 21, you got to go amend 21. And I mean the income tax returns to reduce down your deductions in the applicable year. You don't get to wait until you get the money. Where did I come up with that? IRS Notice 21-49. I'll give you a link to it. It's right there on page 24. But the math that I want you to do here is you get a credit minus what you're paying somebody to help you, minus the tax. And how much are you left over with? So on the front side, you think, okay, well, I'm getting a $100,000 credit. Someone's charging me 30%. So I'm going to pay him a $30,000 fee. And you may think, hey, who cares? It's $100,000 I didn't know about. So who cares if I pay 30 grand? First of all, you participated in a crime because you can't charge a contingency fee. IRS Notice 1027. And if a CPA charged it, they're probably losing their license because AICPA, Professional Code of Conduct 1.510, it disallows contingency fee. But let's just say you paid it. Okay, so you paid it. The other thing is, if you now got 100 grand, you paid 30%, so you're left with what? 70 grand. You're thinking, yippee. Hey, don't get me wrong. Okay, yippee, you got 70 grand. I wish you wouldn't have thought it that way. I hope you don't think of it as just free money out of the sky that somebody helped. So who cares if you pay them 30%? Because you're going to pay tax, okay, on that $100,000 credit. Now, here's what I want you to know. You're going to pay tax on it, that credit, in the year in which the deduction was taken for those wages used for the credit, but you won't be deduct your fee until you've actually paid the fee. Those are not going to be in the same years. So whether we're at the end of 22 or we're in 2023 or in 2024. So if you pay somebody to help you, you pay them a percentage, then the year in which you pay them, you get to deduct that. So in this example, you would be able to deduct 30 grand. Okay, that's egregious. It's just a crime. But 30,000, okay, so you paid it. Well, you get to deduct it. So if you paid it in 22, you deduct it in 22. You paid it in 23, you deduct it in 23. You follow, right? But if you got a $100,000 credit, you're not recognizing the income in the year in which you applied for it. You're recognizing the income, and I should say the reduction of your deduction, 6 1/2 dozen the other, in the year in which you got the credit for. So you got the credit for 2020, you just applied for it, you're not getting the money till later, you already paid the fee, these things don't match up. You're going to pay tax on the $100,000 in the year in which you got the credit as the deduction. Now, what does that mean? Let me make sure you really follow me here. You don't get the credit today. You put your 941X in, you don't get the money today. It's coming in the future. 3 months, 6 months, 9 months. It's coming in the future. You're paid a fee now. Okay, but also here's what happens now. You got wages in 2020 that qualified for the employee retention tax credit. You have a 941X going in today. On those wages in 2020, the IRS is expecting you today to go back and amend your 2020 tax return for the full credit that you're getting, the $100,000. Doesn't matter that you didn't get it. And no, you don't get to deduct your fee in the year in which you're having to reduce down your deduction. So you've got a big split here. So you're going to pick up $100,000 of income, which means you're going to reduce down your deductions by 100 grand in 2020 in this example, which is the same thing as it being income. So you just don't report it as income, but when you report a reduction of your deductions, then you're going to have a taxable event. You're going to owe tax. Your net income just went up. So if in 2020 a business had wages of $500,000, But today they went and got ERTC, filed the 941X, and they're going to get a $100,000 credit. Well, they're going to have to make an amendment to their 2020 tax return for that $100,000 credit. That means that their income went up by $100,000 in 2020. Maybe they're paying the fee now, so okay, they get to deduct the fee now, but it's not offsetting what the adjustment is in the year in which you need to make it. And you're not even getting the money into the future. So how much money are you going to pay in tax? How much are you going to pay a fee? And at the end of the day, when is it that you are going to realize the money, and how much will it be net of everything? So yeah, it's good to get it, but it would be better if you got the credit yourself. I got a seminar, check it out. I give you A to Z, how to get this 3-hour seminar, instant access. I give you Excel spreadsheets. I give you everything. And I even have special videos and examples on how to prepare the Form 941X so that you can get it yourself. All by yourself. It's simple, okay? Now, what we're talking about here is the math. $100,000 credit. Felt like money from the sky. Now you're paying out someone 30 grand. You netted 70. Well, you're going to pick up a tax adjustment in this example back in 2020 or 21 if that's when your wages were used for this credit. So you're going to owe tax on $100,000 back to 2020. So let's just use a blended rate of 1/3. That's even conservative. I could pretend to tell you it could be high as 42%, which is true, but that would be federal and state. My state's 5%. But let's just say for grins, you're at around 1/3. That means you owe $30,000 in taxes, $33,000 in taxes, $35,000 in taxes that you need to come up with now. So what you're coming up with now is the fee and the taxes. Now, even if someone says, oh, well, you don't have to pay us till you get the money. Okay, but guess what? You get to deduct it when you pay them, but the income you're picking up related to this adjustment is back in 2020 or in 21. So it doesn't matter when you apply for the credit, you're going to have a tax adjustment to the year on your income taxes in which you reduced or deducted the wages that were used to get this credit. So if your head's spinning, hey, I'm sorry that it is, but at the end of the day, you're responsible for this. If you ultimately get the credit wrong, you're going to have to pay it back plus penalties plus interest. You're the one that's having to pay the tax on this. So what would be the math on that? 100 grand credit. You pay 30 grand out. Let's just say that you pay 30 grand in taxes. You're left with 40 grand of a $100,000 credit. Now how do you feel about a contingency fee that you're paying? Now how do you feel about money out of the sky? Is it money out of the sky? But why wouldn't you just prepare this yourself? Why not find somebody that's just going to charge you for their time? Maybe you pay $3,000, $4,000, $5,000 fee. So with this, get educated. I'm giving you a link to this notice that I referenced. I'm also going to give you a link to a free playlist where I walk through this. I'm going to give you a link to the 18 myths that are going around. I'm going to give you a link to basically what seems promoters are talking about with governmental orders. And I back it all up with links to the IRS notices and specifically where to go, because these IRS notices are written and read for those that are not tax professionals. You'll be able to understand it. They're written in English. It's a font size that you can read. You can print it. You can read it on PDF. You could read it on your phone or your tablet or your computer. It's in plain language. There's not really a way that you could be ultimately confused. Maybe you got to reread something once or twice. So, is it worth getting a $100,000 tax credit? You bet. Should you be prepared for the tax consequence? Yes. Is it worth paying someone a contingency fee now being fully informed? I don't think so. So, I told you that contingency fees are illegal. Well, I'm going to give you a link to this in the body of the video that takes you right to a video where I lay it all out for you and give you links directly to the law in which it indicates you can't do it. This stuff is simple and easy. When you're dealing with the IRS, it's all at irs.gov. There's nothing secret and hidden. It's all written in a way that you could be able to understand it. So you're solely responsible. So be aware. Have your antenna up. I'm 30 years into the business now as a CPA, still practicing and in the trenches. And as you can tell, I even want to make sure you that I don't even know are protected. So you find somebody that cold called you, You go through it, you educate yourself. It turns out that you do qualify. You feel like you qualify. You're convinced that you qualify. You've done the reading and the research. Good, because you're solely responsible. And they cold called you, but they didn't charge you a contingency fee. They're going to pay. You're going to pay them $5,000 to help you. Whatever. Okay. Point is, you're responsible. So now be as informed as you possibly can, because at the end of the day, the IRS is looking to you for it. Don't have to be scared of it, because if you did it properly, we got no problems. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Have a great one.